Winter is coming. So how will your self-storage facility perform in the downturn of an economic cycle? Let's talk about that today. My name's Mark Helm, and I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. And what I do is I support the small investor who wants to get in this fantastic business of self-storage, or who wants to grow their self-storage business, strategically do so in a way that creates true wealth and a fulfilling career. And I do that by offering a number of services like coaching, one-on-one and group coaching, training at the Quick Start Academy, and even the book, Creating Wealth Through Self-Storage. I'm currently working on the newest course called How to Get in the Self-Storage Business Today. That should be ready third quarter of 2018. When I really saw what self-storage was, I fell in love with it. It was in the mid-90s. I was a commercial real estate agent. I had just received my CCIM designation, which is a fairly high designation in the commercial real estate industry. And I was primarily in the office business. I would lease a lot of office space. I also had a property management company, and we would sell office buildings to investors, manage those buildings for them, lease them up, reposition them, sell them, exchange that money into more office product, and it was a good business. Our record was good. I used to show up every day in a coat and tie and go to work. I had sophisticated customers. I used Argus financial analysis software to project the internal rates of returns and the future cash flows based on a multiple of scenarios. I thought I was pretty sophisticated, way more sophisticated than anybody who would be involved in mini storage. And then I got a call in the mid-90s from the acquisition director of a REIT asking if I would help them find self-storage in our market. Now, for somebody with my training, this was really a step backwards, I thought. But when you live on commission income and somebody wants to buy real estate and somebody has money, you typically will go support them in accomplishing what they want to accomplish. So I decided to take this guy on as a client. We went out and started looking at it, and I fell in love with self-storage. I saw that it had all the benefits of investment real estate with very few of the drawbacks. And we talk about those a lot. I don't want to go into them here, but primarily we're talking about it's a steel wall and a concrete floor generating almost the same income you'll get with apartments, office, and rental. And there's very few and very predictable capital expenses. So it is a great product for small investors. You very rarely will have to unplug a toilet in a self-storage facility, or replace appliances, or paint a wall, or put carpet in. All of the things that eat up your cash flow. In self-storage, you just don't have them. And I fell in love with it and dove in head first. But I never really got the most powerful aspect of being in this business until the recession came in 2008. That's when I fell in love with self-storage all over again. And also, that's when it caught the eye of everyone else in the country. Why? Well, because of how it performed during the recession. What happened is I had been in the self-storage business. I had been bought out by a REIT, not a publicly traded REIT, but a private REIT from the Midwest. Our portfolio was bought out, and it wasn't until 2007 I put another project under contract, and it wasn't until early 2008 that we could close on it. I chronicle that adventure in the book Creating Wealth Through Self-Storage and the case study at the end. But anyway, I got into business right as the market started imploding. And when we closed, I had 88% occupancy in the self-storage facility. And then I watched it start ticking down. Now, for us, we ended up down around 82 to 83%. Yes, we lost about 6%, which turns out to be about the industry average of how far down it went during the quote Great Recession. But I also had a record storage business at the time. That went down 20%. If you were in the office business at that time, you know what, I mean, it was devastating. If you were in the retail business, that sector was hammered. Self-storage, yes, went down 6%, but all in all, it fared very, very well in a recession. And that's when all of the institutional money that had not been going into self-storage started flowing into self-storage, and we saw the big demand for it and the price increases. Now, look at where you are right now in the economic cycle. In most markets, you are now in oversupply, or starting to get in oversupply, and what is the next phase that comes after that is generally recession. So we are at a very unique time in the economic cycle with self-storage. Now, I've been focused on this a lot, and this is the final episode in this. But the reason I have been is because as you put facilities into service now, it's critical that you know it's coming and you plan for it and you underwrite planning for it. Higher interest rates, slower absorption, lower occupancy, concessions in your lease-up period. It's critical that you put those in your underwriting right now. But we're also at a very unique time because self-storage has a very, very good story of how it performed in the last recession. And especially if you're raising money and you work with investors, this is the time to be out talking to them, telling them the story of self-storage. Did you know self-storage is the lowest foreclosed on real estate type that there is? At the last Inside Self-Storage convention, in one of the presentations that we saw put on by a lender, here was the chart. Show this to your investors as you're raising money. So know that occupancy rates are going to go down, vacancy rates are going to go up, interest rates are going to go up, concessions are coming, but as a practical matter, here was the big difference between expansion and the good times and when we were in recession. As an operator, it's critical that you keep your eye on the collections. Typically, we try to run our facilities between 3 and 5%, but at any given point of a month between economic occupancy and physical occupancy. In the recession, that gap between physical and economic can get out of hand very quick if you don't keep your eye on it. You've got to burn a lot more calories on the collections. So we all know the customers that will be late and be locked out, and then once the auctions are scheduled, those people will catch up and they get caught up and their overlock comes off, and then within a month or two they're back into it and they repeat that cycle. We like those customers. We enjoy their late fees. However, what we noticed is, as we got deeper and deeper into the recession, those people didn't come back and we ended up auctioning their units. So just know that during the recession, it's critical that you keep focused on the collections, be willing to cut deals to let people go and not have to go to auction. You'll get more money from the people who own the stuff than you will from someone trying to buy it at auction. But as a practical matter, that was one of the biggest differences that there was. Other than that, you just keep your eye on the expenses and keep your eye on the concessions you're offering, and your self-storage project will fare fairly well during the recession, especially if you underwrote it in the mid-80s instead of in the 90s where current occupancy rates are. So now you know the story of how self-storage performs in a recession, or at least how it has performed historically. and a recession. You follow those steps, you will create true wealth and a fulfilling career in this fantastic business of self-storage. So thank you very much. I look forward to being with you next week, and I invite you to look at the Storage World Analyzer. As we go into times where occupancy rates are going down and absorption rates are slowing down, it's very, very critical that you analyze your projects you're considering putting into service very closely, and the tool we use is the Storage World Analyzer. If you're not using it, I invite you to consider it and to explore it at storageworldanalyzer.com or creatingwealththroughselfstorage.com, and then click on the Storage World Analyzer. So thank you very much. I look forward to being with you next week, and I'll see you then.